Hello, I'm Peter Towers, Managing Director and founder of ESS BIZTOOLS. Welcome to Accountants Minute. Debtors Management, a strategic opportunity. Last week we talked about the survey that Intuit QuickBooks had done with 500 small business operators around Australia. They asked them to rate their professional advisors. And they gave a very poor response. Only 15% of the 500 firms that were surveyed thought that their accountants were supplying the type of service that they required. Only 15%. 85% said that their accountants were not up to scratch when it come to giving them real support, real advisory services, sitting down and tackling the problems as if they were their partner, able to give them that advice. That's a big concern, isn't it? In February 2024, the Managing Director of MYOB, Paul Robson, released a report that MYOB had conducted on about 1,000 of their new subscribers. MYOB wanted to know how they were performing, and they got some feedback on a number of issues. The ones that are pertinent to this conversation today are what was said about debtors management. Some of these people new to business believed that they had to offer credit to every customer that asked for it. Obviously not right. They lacked a system to create control over their debtors. They were not asking people who were asking for credit to complete a credit application form. And the ones that did ask for the credit application form didn't really follow through and check the referees and make sure they weren't getting someone else's problem. They failed to monitor and then chase up overdue accounts. One of the controls that we at ESS BIZTOOLS recommend is that the payment terms should be a set number of days, if it's 30 days, from the tax invoice, not the end of the month, not the date of the statement, but from the tax invoice. And there should be a follow-up process, 3 or 4 days prior to the due date, a courteous phone call, just a friendly reminder to tell you that your tax invoice for number so-and-so for $1,850 is due for payment in 3 days' time. Thank you for your service. And not recognising that Debtors Days Outstanding is a very important business metric that should be monitored at least monthly. Some people do it very successfully weekly. They want to make sure it's not going up. But at least monthly. And the leadership team should be kept informed. Because this is a lot of money that's owed to the business, tied up in debtors. Now, where do accountants fit in all this? We had the result from Intuit QuickBooks, which said that only 15%, 75 out of 500 firms that were surveyed, business firms, thought that accountants were performing a good job. I think you need to make sure that you are looking far more closely at the systems that you're implementing. And debtors is a basic one. We've got some systems that are a lot more complicated when it comes to research and development and raising capital. But this is fairly basic. It's debtors management, and it's out of control. A few years ago, Australia was rated as having the highest debtors days outstanding in the world. Don't brag about it. I'd much rather win a World Cup in football or rugby union than win that dubious international award, but we won it, apparently quite easily. Now, when that happened, the Liberal government of the day brought in some legislation to compel big business to make payments within 30 days, otherwise they would name and shame them. And the Labor government, which we now have, they added to that a bit more, and it's also naming and shaming. It'll be interesting to see over the next couple of years whether the big end of town content in Debtors Days Outstanding reduces or not. I don't really know. We will find out. So poor debtors management is draining SMEs, leading to cash flow crisis and rising insolvencies. This is what MYOB discovered. So this is of great concern because debtors has got a crucial impact on cash flow. Obviously, if someone says to you, have we got to give credit? I would be saying, no, you don't have to. But if it's typically given by your competitors to their customers, your client's probably going to have a very difficult time in not offering credit to their customers. They'll just wander off and talk to someone else. The Personal Property Securities Register is a piece of legislation that's had a checkered career in Australia. It was a woeful bit of legislation when it was first brought in. 380 odd changes had to get made after a judge investigated the legislation. I'm still not sure that it's 100% legislation, but you don't see many comments about it at present. But we should be aware of it as accountants and make sure that your clients are familiar with it, particularly those tradie type clients who get involved in big projects with builders. Unfortunately, the construction industry's got the highest rate of failure in Australia at present. I think I read somewhere the other day, nearly 30%. If not, it was well into the 20s, nearly 30% of failure rate in the construction industry. So what's that mean? It means that liquidators are getting appointed. And liquidators have got a role to play. They've got to go out and try to collect money that is owed to their client or was paid under duress. And this is where the liquidators do come into account. They go through and they work out that one of your clients has been receiving money because they were knocking on the door, they were going around to his house twice a week and collecting the payments, and proportionately they got paid more than others. So if they haven't registered that client on the Personal Property Securities Register, they may have to pay some money back to the liquidator, and they won't be very happy about doing that. So you need to be looking at the Personal Property Securities Register as well. Let's look at what goes into a debtors system, though, because within ESS BIZTOOLS, we've developed a debtors systems manual to help the poor person. I call them the poor person, normally a lady in SMEs offices, in my observation over the years, who have been given the job of being in charge of debtors. And when you inquire, you might find, as I have, a significant number of them are basically the last employee on. It's as if whoever comes here last is going to get debtors because no one wants to do it. One of the reasons is no one's been trained in how to manage debtors. They don't know what they're doing. This is where the debtor systems manual comes in. We go through and we have developed a debtor systems manual. Now, a subscriber to ESS BIZTOOLS, our members, are quite welcome to edit that manual to suit the requirements of a client. Years ago, as a young accountant, I wandered around a fairly major business that we were doing an audit on as branch auditors. And the audit manual told me to check the cash receipts book, do so many entries and trace through certain aspects of what was happening. So I walked up to the lady who I'd been allocated to by the manager of that office and said, if you need anything, you go to Jane. So I went to Jane and said, can you get me the cash receipt book, please, Jane? And she looked at me a bit strange and off she wandered. And 10 minutes later, she come back with someone else and said, you wanted the cash receipt book? I said, yeah. You sure it's called that? I said, yeah, it's in my audit manual here. Check the cash receipts book. And off she went again. And someone said to me, you better sit down and have a cup of coffee, I think, Pete. They're going to be a while. They're over there, yak. And finally, another lady sitting, hearing all this, come over to me and said, you're not looking for the green book, are you? I said, the what book? She said, the green book. And then I realised that they had colour-coded everything. They had green books, red books, yellow books, purple books, orange books, all sorts of names. They coloured it. But it hadn't been written into the audit manual. So when I got back to the office, I went to the manager that I was working for. I was just a young graduate. And I said, hey, you could have put in here that this is all colour-coded. He said, oh, I meant to do that last time. I said, yeah, well, we mucked around for a couple of hours. They were trying to find the cash receipts journal. And then someone sparked up, oh, you're looking for the green book. So just be aware of that in how you draft things. But you can personalise your debtors systems manual so that the person sitting there in charge really understands what the functions are. So the first thing I think you should look at is the credit application form. I've said in the opening comments that one of the problems that MYOB located in their review of their clients was that there'd been an assumption that they had to give credit to anyone who asked for it. That's not correct, as you know. So what we should be saying to the client, yeah, you don't have to give credit. And if you're inclined to give credit, get the applicant to complete a credit application form and then check it. Make phone calls to the referees that they've indicated, making sure that they're not getting someone else's problem, and explain that to the person looking after the debtors. We don't want someone in here who's paying their bills currently at 150 days. They're only going to give us a problem. And sooner or later, someone's not going to miss out badly, and we don't want to be the ones that miss out. The director's guarantee form. I think you need to explain to the person looking after the debtors why they are so important for private companies. Unfortunately, private companies get a bad rap when it comes to failures. One way of trying to protect that is to have a director's guarantee. So the guarantee form needs to be attached to the application form for credit. And I tell people to attach that irrespective of who they say they're trading as when they come to the office, because I've had people that tell me they were told, oh no, they said it was going to be an individual and the application comes back in a company name. And because they never sent the director's guarantee form, they never bothered about it. And you know what happened? They were the ones that fell over 8 or 9 months later. And someone went looking for the guarantee forms and they weren't there. And that was the story. So I'd give them out with each and say, if you put a proprietary limited company as being the company that's dealing with us, the customer, we want directors' guarantee forms. And then what happens to those directors' guarantee forms? They need to be filed so that they're going to be available if required, and I hope they're never required, but if they're required, you need to be able to produce them. But it might be 2, 3, 5, 7 years' time when they're required. And another thing to keep track of course, is if there's changes in directors or some of those original directors resign and off they go, you need to get the updated ones. There needs to be a procedure. Our document has the procedure for approving a new customer. The person in charge of debtors has put all this material together, and if that person's been trained properly, they should be making a recommendation. And the general manager or the owner goes through the application and decides whether they're going to offer them a credit account. As part of all this, we need to make sure there are procedures in place to ensure that, firstly, tax invoices are produced quickly, very promptly, and sent to the customer. So if there's any dispute, it should be raised straight away. But on the tax invoice, there should be a stamp that's been put on telling them when that invoice is due for payment. So if the business is trading on payment in 30 days of tax invoice, that date should be firmly shown on the tax invoice, not in some little small thing somewhere, very boldly, because that's when your client expects payment. And obviously, if they're trading on a 14-day basis or a 7-day basis, which some industries do, especially in the food supply to restaurant industries, those dates need to be on there. And I think the other big document is the welcome to new customer letter. These is someone that's a new customer. We've given them a few forms to fill in and probably maybe seen a bit tough to deal with. But now here's the opportunity to smile at them and say, welcome as a customer of our business. So it's the opportunity to confirm, yes, we've approved them for a credit account and what the limit is and what the payment terms are, but also to confirm back to them a very important question that would have been asked in the application form. What information do they require other than the tax invoices to pay an account? That's a reasonable question, because people come up with all sorts of excuses why they won't pay an account, don't they? Well, I think we should be firmly asking them at the very beginning. Some people require weighbridge certificates. Some people require health certificates. Some people might require certificates on temperatures in trucks, the proof of what the temperature the goods were stored at, or whatever it is, that should be clearly documented in the file. And someone has got to have the job in your client's organisation to make sure all that's assembled. Because you can bet your next week's pay that if you don't attach that tax invoice will not get paid. And if your client is dealing with large organisations who may be centralising their payments out of offices in capital cities in Sydney or Melbourne, and your clients in Western Australia or North Queensland, it's going to take a long time to fix up the problem, because those tax invoices get sent to the payment area in Sydney or Melbourne, and someone goes through it and they're basically ticking some boxes that they've got on their control sheet, and they say, well, where's the weighbridge certificate, or where's the health certificate, or whatever? It's not here, so they won't make payments. So they put it aside. And it might take them a few days before they bother telling anyone that that's what they need. Your client's probably going to be saying, oh, they don't pay us. A few years ago, I was running a seminar for Oz Industry on directors' duties and responsibilities, of all things. And we were talking about debtors and debtors management. And someone said, what can I do to get my debtors days outstanding down? I said, what are yours? Oh, up over 85 days or something like that. And I heard another guy down the front of the audience rumble, probably more to himself, and he said, but if you did what they wanted, Jim, you would get paid quicker. And my ears pricked up, and so did about 20 people in the immediate vicinity of this guy. And I said, do you mind repeating what you just said? Was that for public consumption? He said, yeah, I told Jim, he's a mate of mine. Him and I are competitors. We deal with the same clients. We're making supplies to mining companies. And the rules are you've got to supply various additional information. You put that with your tax invoice, you send it away, I get paid. My debtors days outstanding is running at about 34 days. What's yours? I said to Jim. Oh, it's up around 85, 89. I said, are you doing what your mate down here just said? Oh, yeah, but why have I got to supply all that? I said, if you want to get paid, if you want to deal with this customer, they're their terms. If you don't want to accept them, well, don't deal with them, because they're going to drive you mad, and your debtors days outstanding will go out further and further. So Please make sure your clients realise that when it comes to debtors management. But the main benefit of the welcome to new customer letter then is to give the big sales push. Perhaps have a message from the sales manager. Put his or her photograph there. Talk about the big specials they got coming up, or their Friday afternoon drinks and sausage sizzle or something, that they bring all their customers in and they have great specials and they talk about new products that they're releasing. You need to then make sure that there's some assistance to the sales team to make sales to this new customer. Because you've gone through a few things with them, haven't you? You're getting them to fill in forms, you're ringing up their other customers, making sure they pay their bills, they get feedback on that. I don't know if it's worthwhile going to this new supplier. But we've done all that now. We've given them the account. Make them feel real welcome. And if there's some sort of festivity and perhaps a free drink, it might be a great idea to get them in and make them a great customer. So are your clients implementing this sort of system for their debtors, following through? Or are they off the track like MYOB discovered when they did their survey? Perhaps you should be doing the survey. So keeping debtors under control is very important. Longest debtors days outstanding in the world. That wasn't a bad dream. I was hoping it was at the time. The small business ombudsman, Kate Carnell, was then in that position. She called it the worst decision that could have affected small business, a disgrace. And it was. But I don't think it's all the big end of town or companies, big companies or government departments even's fault. I think we've got to make sure that our clients are playing their role in this overall system. So that's my take on debtors management. I hope I've created some food for thought for you as accountants and bookkeepers. We need to be supplying a broader range of services to assist our clients to survive and thrive, and if they wish to scale up. At ESS BIZTOOLS, we have a range of financial, commercial, and management accounting advisory services to assist you to perform an in-house accountant or chief financial officer role. But you need to have the systems in place. You need to have the manuals. So you can sit down and do all that yourself if you wish. I just hope you've got a couple of years of spare time, which you won't be doing much other work. Or you can use the material that we've produced. And I started writing all this about 28 years ago. We commercialized it from 26 years ago. I don't know if I'd ever start again, to be honest, but anyhow, it's there. If you'd like to talk to me, please give me a phone call, 0418 190 181, or send me an email, peter@essbiztools.com.au. Let's all work together as the accounting industry to change that disgraceful result that Intuit QuickBooks got from the 500 SMEs that they surveyed, when only 15% of them said that they were happy with their accountant service. We can do that by being more concerned about the nitty-gritty issues of business running that our clients are involved in. Things like we've discussed today, debtors. It's just not a figure. You need to be analysing it. And please monitor that debtors days outstanding. I've been horrified over the last few years of some of the figures that the debtors days outstanding calculates at. 102 days, I found on one occasion. And the accountant, external accountant advising that firm, I did run into him a few weeks later. And he told me he didn't know what the debtors days outstanding figure was because it wasn't part of his brief for the tax return preparation. Well, I can assure you it is part of the brief if you want to offer advisory services to your clients, and I hope you do, because that is a very important part of the role that I believe accountants need to provide to keep your businesses viable on a high level in the future. But it's what, more importantly, your clients need, because we've got the highest failure rate ever, according to the current Small Business Ombudsman. And we need to do our part to try to reduce that shocking statistic. Stay safe. Have a great day. Goodbye.